Okay. Before I really dive into sharing my screen and sharing the slides, I wanted to ask a couple questions just so I can really personalize the topic today. Is there anyone in the group who's going to be going on to fellowship? Okay, Katie, what are your plans?
Minimally invasive surgery.
Okay. Okay. And will that be at UCLA or a different site?
At UCLA.
Okay. Gotcha. Anyone else?
I'm doing MFM at UCLA.
Okay. I'm just making some notes here. Okay. And anyone else, or is everyone else going to be entering practice in this summer?
Alec, who's not on the call, is going to be doing UroGyn, and then everyone else is generalist.
Okay. Do you know if Alec is going to be staying at UCLA or going outside of California? At UCLA? Okay. Okay, perfect. The reason I ask is because I often get asked the question, is it best to secure this type of coverage now, or should I wait until I'm a fellow? And so we'll address that. And I mostly kind of wanted to gather if anyone was going out of state, because if you are going out of state, sometimes we can look at out of state pricing, which is often cheaper than California. As you guys know, we pay more, a higher premium for pretty much everything in California. It's not just housing, it's even disability insurance. So that's kind of why I asked. And then is there anyone in the group who already purchased a policy, maybe back in medical school or earlier in residency? No? Okay. I asked because if you had, it's a really good time to review it now before you exit, just to make sure it's the right amount of coverage, there's no exclusions on it. So it's good to review those things. So if anyone who's not physically present has a current policy, my advice would be to take a look at it now before you leave so that you can take advantage of either increasing it or just making sure it's the right thing for you. So now I'm gonna just take a moment to share my screen and we'll dive into the actual slides. Let's just get this. Okay. So I really kind of owe a minute to thank one of your past co-residents, Eileen Suey, because last June, early July, she and I were working together to put together her disability insurance policy. And she was kind enough to introduce me to Katie and Jenny as they were rising into their chief year. So I really appreciated that introduction. And I work independently. So I want to emphasize that because what that means is as an independent broker, I'm able to represent all of the disability insurance companies rather than just promoting one over the other. So, if we work together, I'll be able to show you everything that's on the marketplace and kind of put them side by side so that you can make the best decision for yourself. Also, in the last few years, I've had the opportunity to work with some of the past REI fellows that you guys might remember, Drs. Joshi, Hoyos Martinez, and Riestenberg. And so I share that not to be, obnoxious with name dropping or anything. I just wanted to maybe give you some confidence that I'm not a complete stranger to UCLA or to some of your past colleagues. So today's goals are pretty straightforward. We're just going to look at what disability insurance is. Why do people tell you that you need this type of coverage? I'll also be showing you exact pricing. So I'll show you some different ages so you can see kind of a ballpark range of what this type of coverage would cost you. And then we'll review there's really 5 companies that have the type of contract language that's suitable for physicians. And so we'll show you those. And those are really the best 5 as options for residents and fellows. And then we'll just kind of touch on how COVID has impacted the application process. But first and foremost, we'll just address that first question. So disability insurance, in the most basic description I can give you, is it's a contract between you, the policyholder, and the insurance company. And what that contract says is that if you're ever in a position where you're either too sick or too hurt to work, the insurance company is going to pay you a monthly benefit. You can look at it as a monthly paycheck. Instead of getting it from your regular occupation or employer, you'd be getting paid from the insurance company to kind of help you stay afloat during that absence from work. So that's basically the gist of it. Of course, there's other nuances, but that's the basic premise of it. And whether or not you need it really just boils down to this one question. So imagine if you were to have an unplanned, prolonged absence from work, would you be able to maintain your current lifestyle? Most of us, no, we rely on our income to keep us afloat, keep us moving forward and paying all of our bills. I've only had one client where during the end of she was a psychiatric fellow, but her parents had shared that she was actually going to be getting a large inheritance. And so for her, we did a very small policy. But the most of us need to protect our income. And I really would like for you to view this type of insurance coverage as a safety net. It's going to be there for you if you have an unforeseen event that causes you to miss work. And really, you can kind of picture this or imagine it like your own personal GoFundMe account. Okay. We often see those put up when there's, a devastating situation where we're in need of some extra finances. And so you can kind of picture it as your own personal GoFundMe. So when we have a prolonged absence from work, all these financial responsibilities are still there. You still need to make payments on any student loans you might have. Of course, we got to meet the rent or mortgage. You'll have your health insurance premiums. And perhaps the largest here, though, is the associated medical costs with the illness or injury. And as you guys, I'm sure, have heard and read, like these unforeseen medical costs contribute to over 60% of all personal bankruptcies and half of all home foreclosures. So having an emergency fund or a disability insurance policy can really kind of save the day if you're faced with this sort of thing. And then, of course, you still have all the other basics to pay for. I want to make it clear that, my intention is not to scare you into buying anything. I'd rather you view this as from a different, standpoint of giving you some peace of mind, knowing if you have this type of coverage, you will be okay if something happens and you have to have a prolonged absence from work. So we often talk about disability insurance as income protection or income replacement. That's really how it functions. One of the things that I'm often asked by residents is, what does it look like? What does a real claim actually look like? And so I put together this chart of some actual claims. And I sourced this from one of the disability insurance companies. It's called Guardian. And they put this out in 2018. You can see it's just a chart here where it lists the occupation, the gender, the age at which the policy was issued, just means how old was this person when they bought the policy, and then the age at which they went out on a claim, and then what that diagnosis was. So I'm not going to go through every line, but I will pull out a few just to share with you. You can see the very first one was a male surgeon. Just 2 years after buying his policy at age 33, he was diagnosed with bacterial meningitis and had some, started collecting benefits. Scrolling down just a bit, there's a female radiologist who at age 47, just 5 years after buying her policy, had a malignant breast tumor. There's an OB female, 3 years after buying hers at age 48, had colon cancer. The last two you can see was an incidence of stroke. So, I can honestly attest that these are the types of things that I see in my practice. We don't typically see a lot of claims for doctors who are in their, twilight part of their career. It's really usually in 40s, early 50s that we start to see some claims being submitted. And you can see it's a wide range of reasons for this type of these types of claims. It could be an accident or it could be an illness. And I guarantee if we had the opportunity to ask these individuals if they thought they'd put in a claim just 3 to 5 years after buying the policy, I'm sure they would have said no way. No one ever really anticipates or thinks that these types of things will happen. And hopefully they never will. So next we'll just look at the types of things that you should look for when you're considering an individually owned policy. What's nice is that when you buy your own policy, it's fully customizable. So you can pick the benefits that you want, and we can show you some different options. Also, because it's owned by you, these policies are fully portable. So some of you are staying on at UCLA, others are going to enter practice and go to maybe other health systems. Wherever you go, this policy will follow you, even if you move out of state. So it's going to serve you throughout your entire professional career. And that's very different from group coverage, because if you have a group policy, once you leave that employer, that group policy expires. Much like the current coverage that you have as the resident at UCLA, once you leave at the end of June, by July 1st, that group coverage will expire, whereas the individual ones are fully portable and move with you. Most importantly, too, the benefits or the payout that you would receive from an insurance company come to you tax-free. So let's say you have $10,000 or $15,000 in your monthly benefit and you go out on a claim, you would get that whole amount tax-free. And that's because you're paying your premium with after-tax dollars. So they can only tax you once. So keep that in mind. And again, comparing this to group coverage, usually the employer pays those premiums. So if you go out on a claim under a group policy, those benefits are taxable. So as you can see, it's preferable to have an individually owned to avoid that tax. And then individually owned policies are a really, really nice supplement to group coverage. You can, if you go out on a claim, you can receive benefits from both your individual policy and the group to really maximize the amount of money that you're bringing home while you're not working. So it's ideal to have both, really. Now, these are the specific things on what to look for. And I also have a generic checklist that I can send to Katie and Jenny to share with you guys, so that when you're looking at different options, you can kind of check through, you know, does this quote meet all of these criteria? And the first thing that you really want is a non-cancelable and guaranteed renewable contract. Those are just insurance terms, but basically what they mean is that as long as you're paying your premiums on time, the insurance company cannot cancel the policy on you, and they can't change the rates or any of the terms of the contract. So you want that security. You want something that's going to not change over the years. You also, and this is very important for physicians, you want the coverage to be specialty specific. So as we talked in the beginning of this, some of you are going on to fellowship, the more specialized your practice gets, you want the definition of disability to be specialty specific, so that if you have an illness or injury where you can't do that specific specialty that you were doing immediately prior to the injury or illness, that's what they would consider your occupation to be. So again, this type of policy is going to evolve with you, depending on any additional advanced training that you might have throughout your career. The other part of this is called own occupation. And that's important too, because a big portion of your day is doing some surgeries. There could be a situation where you have an injury, maybe to your hand, and you're unable to perform the gynecological, function or duties of your job. However, you could go into academia and you could teach. So if you had an own occupation definition, and let's say you have that hand injury, they would consider you to be totally disabled. You would receive benefits from the policy, but then you can go out, again, using this academia example, and collect money from any other job that you do. So you're receiving benefits from the policy and from your new paycheck. So it allows you to keep working even if you can't do, your original job. And that gives you the flexibility. So that's what you guys want. You want own occupation, specialty specific. And then there's a few options to enhance the contract, and these three are extremely important. There's the future increase option. We call it FIO. FPO just means future purchase option, just depends on the company. But what this does is it allows you to increase the benefits on the policy over time. So as your income increases, you can revisit the policy every year and increase your monthly benefit. So we have your total monthly benefit pool that you start with, and then there's a future increase option pool of, let's say, an extra $5,000 or $10,000 that you can add into the policy over the years and not have to answer any medical questions when you do those increases. So the only medical questions they can ask you are when you first apply. Once you're approved and the policy is issued, they can never ask you another medical question. Unless, of course, you put in a claim, then they're going to ask the reasons for that claim. But the FIO is very, very valuable, and you would always want that in your policy. The other thing is required of all contracts in California, but it's called partial disability coverage. And this is super important, you guys, because the majority of claims that we submit are partial disabilities. And all that means is you're still able to work, you're just not working at your full capacity. You know, you might be seeing 10 fewer patients a day. And so with most companies, all you would have to show is a 15 to 20% loss of income to start collecting some benefits. So you might not get the full monthly benefit amount, but you can accept a partial amount to help you make up for that lost income. So this is very valuable. Also, there's a cost of living adjustment. It's called inflation protection, or we call it COLA, but it's a 3% increase. So anytime you have a prolonged absence from work of over 12 months, starting at the 13th month, the policy would pay you 3% above whatever the monthly benefit amount was. And then, of course, you really want to make sure any quote you look at, whether it's from me or another agent or broker, you want to make sure you see a resident discount on there. Don't leave anything on the table, because the majority of resident discounts are between 10 and 20%. Sometimes they can be even a little bit higher. So we will talk about all 5 companies. I'm just going to kind of go in alphabetical order here, starting with Emeritus. This is a company, they're A+ rated by all the, financial ratings. They've been in business for over 100 years. And this particular company has a special program at UCLA. You may have heard about it. We call it the GSI, but it just stands for Guaranteed Standard Issue. This is available to all PGY levels, so not just those who are finishing. And Emeritus is a sponsor of this program. So remember a minute ago when I kind of ticked through all of the major things that you need in your policy? The Emeritus GSI has all of these features and benefits. It's a non-cancelable, guaranteed renewable contract, which is what you want. It's fully customizable, up to $10,000 in monthly benefit. There's a 90-day waiting period, which we can talk more about in a minute, but basically that's the most common in the industry. And because this is called long-term disability coverage, you need to show that you're having a prolonged absence from work. So 90 days is kind of the gold standard. If you have a shorter turnaround with your absence from work, you may have some short-term disability benefits from your employer, but these are a 90-day waiting period. And then it has a great benefit period all the way to retirement age of 67. So what that means is, let's say you put in a claim at the age of 48 and you're unable to practice as an OBGYN or whatever your specialty is, you could get paid out the full benefit period from age 48 all the way to age 67. Again, it's specialty specific definition of disability. It has the own occupation language in there, and it's for that entire benefit period. It has those 3 extra features that we talked about: the enhanced partial disability benefit, the 3% cost of living inflation protection, and future increases. And then for all the females in the group, this is a huge star next to this one. It has a unisex rate, or a gender neutral rate. And that relates to a huge cost savings for the females. On top of that gender neutral rate, it also has a 20% resident discount. And then what I highlighted in yellow is what makes the GSI so unique from some of the other options that are available. No other company on the market has what's called a non-disabling injury benefit. What that is maybe during your weekend, you're hiking or playing basketball, or whatever your hobby might be, and you have an injury, you end up in urgent care, and you end up walking out in a boot or something of that nature. You might still be able to show up at work on Monday, but you've incurred some out-of-pocket medical costs, and Emeritus will actually allow you to submit those receipts and get reimbursed up to half of whatever your monthly benefit was. So if you had a $5,000 monthly benefit, you could get $2,500 cash within about a week of sharing those receipts with them for these non-disabling injuries. So again, that's unique to them. And I like to point it out because I actually had a claim for this. It was back last March. One of my female pediatric dental clients, she was up in the Washington area and got furloughed because of COVID. She was just picking up food one night and had a slip and fall type thing at a restaurant, ended up tearing her ACL. And she put in a non-disabling injury claim, and she emailed me after. She was so pleased that they had deposited money into her account within 7 days. And so she was really thrilled. Also, they have something called the Good Health Benefit, which, remember that 90-day waiting period? Emeritus will reward you for your good health. So every year that you do not put in a claim, they'll take 2 days off of that 90-day waiting period. So let's say your first claim is 15 years from now, you will now get paid in 60 days as opposed to 90. And I think that's huge. They're the only company that does that. So I like to point that out. But perhaps the biggest differentiator on how the GSI is different from other options is that there are only 4 very general medical questions for this application. And I'll be showing you those in just a second. All the other options, you would have to go through a much more extensive application process. And then, as I kind of mentioned a second ago, I know we're all 4 years here today, but all PGY levels are eligible, and I'll kind of show you the difference of what a starter policy would look like for PGY 1 through 3 versus the full program that you're all eligible for. So this is sort of just what the options look like for the fourth years, like all of you. You can see there's several different monthly benefit options and then a larger future increase pool. But each of these levels, you'll notice just by doing the math, they add up to a $10,000 benefit. If you wanted more than $10,000, they allow you to do what's called a buy-up. And so if you've talked to any financial planners, because your income is typically going to be in the mid 300,000s, perhaps higher, you may want a total benefit of about 15,000 in coverage. So what Emeritus will allow you to do is get the 10,000 by only asking 4 very basic medical questions, and then you can get an additional 5,000 by doing a buy-up. The difference is that they're going to ask you more specific health history questions to do that buy-up portion. And you have to understand from a business standpoint, with the GSI, they realize that they're not doing their typical full underwriting of ordering medical records and all, doing a prescription drug check. So they realize that they could potentially be taking on some risk, or perhaps someone who has a pre-existing condition. So to do the buy-up, you just have to go through the more traditional process for that additional amount. But the buy-ups still have the unisex gender neutral rate, and it still has a 20% discount applied. You can get all the way up to 15,000, 17,000, 20,000, whatever it is you think is best for you. And so we can kind of talk about that on an individual basis to see how much coverage you're looking for. But the key points with this GSI is that again, short application, you don't have to show any pay stubs or financial proof. They know that you're a resident at UCLA, and that's all we have to show. And then there's the 4 questions. So we can look at these specifically right now. I know this is probably impossible to read. I'll just quickly go through them. The first one is, during the past 6 months, have you missed work, altered your work schedule or location, or worked less than full-time schedule due to sickness or injury? Most people say no, but I have had some yeses on this, and it's not a deal breaker. If you had maybe a positive COVID test and you had to follow the UCLA protocol, all we would say was, yes, you missed some work from this date to this date, and then you return to work without any residual effects. The others are much bigger kind of knockout questions. Have you been diagnosed with or treated for a condition related to the total loss of speech, hearing in both ears, sight in both eyes, or use of both hands, both feet, or one hand and one foot in the past 5 years? Yet to have anyone with those issues. The next one talks about adaptive equipment, such as a pacemaker and ADLs. And then the final one is a cognitive question. And so as you can see, these are very basic They just want to basically make sure that someone doesn't have these severe issues. If you answer no to all of these, or a yes to the first one, but with an explanation, they will issue you the policy without any further questions and without any exclusions on the policy. So it's streamlined, it's easy, and it's fast. And that's the key of a GSI program. There's only 3 of us at UCLA who are allowed to sell this particular Emeritus product, and that's me on the left, Eric Hatfield in the middle, and Janet Mendez. Janet's been a mentor of mine for the last 5 years. She's really terrific, and her and Eric had worked together for, I think, 15 years prior. So if you've received quotes from someone else, typically they won't even talk about the GSI because they're not allowed to sell this. And this is typical for GSI programs all across the country. Insurance companies will pick, 1 to 2 or maybe 3 people to promote that particular product. So we are the 3 for UCLA. If you request a GSI quote from me, this is what I'll send you. It's a 5-page packet. The cover page, you can see it's for house staff. It'll have your age, your current age, and 4M just applies to, that's just the occupation class for OBGYNs. Okay, so if you have a friend who's same age as you, but internal medicine, they're called a 6M. And you can't really compare because your occupation is actually considered to be a little more high risk than someone who's in internal medicine or peds or psych. Those sorts of things are lower risk. They put in less claims than someone of your specialty. And so as a result, you might pay you will pay a little more versus a 31-year-old internal med resident. Hopefully that makes sense. And then the image on the right of the screen is the 5th page that has kind of the summary of the key features. And then it has those 5 different benefit levels that you can choose from with the pricing. So now we're going to look at what it would mean to go through an application with another company, not the GSI, okay? So it's way more extensive. Definitely won't want to discourage anyone from doing this, but you just have to understand that they are going to do a much more extensive look at your health history. There will be a phone interview in most cases to respond and answer all their health questions. Usually takes about 35-40 minutes. There's a prescription drug check. They do have the right to collect medical records. And any pre-existing condition that's either disclosed in the interview, on the health history form, or as a result of them doing the prescription drug check could lead to a possible exclusion of coverage for that specific condition. Or they can charge an extra surcharge because of a condition that you may have. Worst case scenario, you go through the whole process and you get a decline. It's somewhat rare, but it does happen. They also routinely will do a DMV check. And you might wonder, why are they doing that? Well, they're looking for risky behaviors. They're looking for a DUI or a moving violation or an at-fault car accident, okay? And then believe it or not, they even will ask you about your hobbies. If you're PADI certified, they'll ask you how deep your dives are, where you go for your dives, when your last dive was. If you rock climb, they'll say, well, is it indoor with a harness or is it outdoor on your own or with a guide? They'll ask a lot of questions. And so as you can see, if you choose to go this route, it just takes a little bit more time on your part and it's definitely more invasive. Perhaps the biggest issue here is the prescription drug check, because I've had situations where a resident will go through the health history form rather quickly, maybe not read everything, perfectly. And then so basically they put no for everything. And then the insurance company does the prescription drug check. And believe me, they go back 5 to 7 years. So then they'll say, okay, what's the prescription for Lexapro or Zoloft all about? And then they want to order records and see that, there's a mental health diagnosis or anxiety that's been, written down in your medical records since adolescence or something of that nature. And so those prescription drug checks kind of lead them down this little rabbit hole of wanting to look through your entire medical records. I'm going to share 3 quick stories of just cases of mine or residents that I've worked with where we've chosen to go down this route. And the first one, he was a 30-year-old internal med resident, and he wanted to compare the GSI with the fully underwritten options. And so what I did was an anonymous inquiry for him because I didn't want to submit the application and kind of blow our chances. So what we did, I gathered his health history and I sent it off to a few different companies. His last 2 physicals, he had an elevated A1C over 5.7. I think one was 5.9, the other was 6. So he was pre-diabetes, and he actually had a family history because on the health history form, they do ask about first 3 relatives. And so the insurance companies came back, again, his name was not attached to this, but they came back saying that there was going to be between a 20 to 25% rate increase if he chose to go the fully underwritten route. And so it basically washed away that 20% resident discount that he would be getting. And it just didn't make sense for him to do this. And his birthday's coming up in May, so we're actually going to be applying for the GSI in, a few months. But that was very telling for him because he felt like he was a healthy guy. His weight and height, everything's like BMI's in normal range. He just has the family history and a, slightly elevated A1C that made him pre-diabetic. The second story is more of that DMV issue and also the prescription drug check. This was a female. She was 32 years old, just doing a regional anesthesiology residency at Cedars. And keep in mind, over at Cedars, they do not have a guaranteed standard issue option. So her only choice was to go through full underwriting. And she had been diagnosed with ADHD as an adolescent. She has a prescription for Adderall. She also has shift work sleep disorder. So there was a prescription for Ambien that she filled regularly. And within the last 18 months, when they did the DMV check, she happened to have 2 at-fault car accidents. Really just a stroke of bad luck. They were very minor, just kind of fender bender sort of thing, no injuries, but insurance, car insurance was notified and it was on a record. And so the insurance company, this was Mass Mutual for her, they kind of look at the big picture. They see someone who has attention deficit disorder, possibly sleep deprived, who's gotten into a couple car accidents. Didn't look good for her. And so they made her an offer, but they did not offer her that future increase option, that second pool of money that would allow her to increase her benefits over the years. She was really in a bind because, again, no GSI at Cedars, so she pretty much had to accept the offer. But it's just an example that, I wanted to share to show kind of how things can go sideways when you apply for some people. And then the last one I'll just share real quick. This was something that just came up about 2 months ago. He's a Kaiser pediatrician. He's an attending. He's been there for 6 years. He's 34. And he was just playing soccer one weekend and tore his ACL. He was applying for more coverage because he wanted to supplement his Kaiser group and just have more coverage. And he had to have a surgical repair and physical therapy. And so they ordered all the records. Otherwise, he was totally healthy. They issued the policy, but they put a left knee exclusion on his policy. And so with him, we're able to try to remove that exclusion in a couple of years if he can show that he's had no ongoing treatment and no symptoms or recurrence of the knee injury after a 2-year period of time. So I'll be working with him once he can meet that threshold to possibly remove that knee exclusion. It's called a reconsideration. And I'm really diligent about doing that for my clients. If they go through full underwriting and we get a contract that's not ideal, anytime we can apply for reconsideration, we'll look at doing that. So let's just go to the next one. And then just a reminder, at UCLA right now, if you take advantage of the seat you're in as a current resident, you do have the guaranteed standard issue option where you don't need to go through this whole process that we just outlined. This is what a typical application looks like. I don't expect you to be able to see this. I'm just showing it so that you can see the length and the amount of questions. They usually want to go back about 10 years into your health history, and they will ask about first degree relatives and their health history versus the GSI, which just has these 4 questions. Okay, so you can kind of see the difference. And honestly, each of you is individual, and we can talk one-on-one to see which is the best route for you. For women, hands down, the best way is to get this gender neutral rate with the GSI because it's a huge cost savings. For the men in the group, it's really going to be worthwhile for us to look at both options, the GSI and then the fully underwritten, because with some companies, you might be able to save a little bit of money if you're willing to go through that full underwriting. So for the men, I usually like to have just an honest talk one-on-one about your health history. We can submit an anonymous inquiry if we want and see if it's beneficial to go through that full application process versus the quicker 4 questions that you see here with the GSI. Hopefully that all makes sense. You might be asking at this point, why would a company do this? Why would they only ask these 4 questions? And you have to understand these GSI programs are actually very, very common at large medical and GME programs like yours. So I'll just share with you, if you have friends who are over at USC or maybe Harbor UCLA, they have a GSI program with Guardian, which is one of the other companies. If you know someone down at Loma Linda, UCI, or up at UCSF, they have a GSI program on their campuses with Emeritus, which is the same company as the UCLA one. And then if you know anyone down at UC San Diego, or perhaps in North Carolina at Duke or Chapel Hill, they're with a company called Standard. So this is very much the norm for big GME programs like yours. And really you have to look at it from a business decision. These 5 companies are very competitive with each other. And they're trying to gain policyholders and they want to gain their market share. And so the way that they like to do this is to have GSI programs at certain parts of the country and bring in some new young, typically healthy residents. They realize that some will have some pre-existing conditions, and that's why they cap the coverage at 10,000. Remember, if you want more than 10, you do the buy-up. You still get the resident discount and the gender neutral rate, but you go through the more extensive medical questions. So is that making sense? So a lot of times there's skeptics where it's like, why would a company, have this GSI? Why would they make it so easy? And hopefully providing those examples kind of shares why these GSIs exist.
Hey, Michelle.
Oh yeah, sure.
Why would you do a buy-up now as a resident? Because I would imagine you do it probably later on and then wouldn't be able to get that discount, right?
Good question. Yeah, good question. So remember that future insurability option, that FIO pool, that you can do any point in your career up to age 55. So there's always this pool of money that you can add in as you go, but the buy-ups are only during residency or fellowship up to 180 days of what your finish date is. So I know, Katie, you had mentioned you're going on into fellowship, so we could talk about doing kind of a start, a baseline kind of policy now, and then doing a buy-up when you're either in fellowship or exiting fellowship. But it's basically you would have to apply for the buy-up as a resident in order to get the resident discount that's tied to it. Because once you're out in the world and you're attending, we can't tie you back to UCLA and access this program. Does that make sense?
Yeah.
Okay. So it's kind of like trying to, I know it's hard now because you're not out making that high income. It's hard to make this decision, do I really want 15,000? Do I really want 20? But if you look past, and what the average income of an OBGYN in California is about 325 or so, we're just trying to prepare for the future. And you don't need to, let's say you want to do a $5,000 buy-up, we could do $1,000 in monthly benefit with $4,000 of future increase. So it keeps the cost very low. So there's ways that we can work that out, and I can show you different options, and then you can just kind of make the decision on what's best for you. Okay, so again, just your affiliation with UCLA is what you want to take advantage of, because it gives you the discount. I just hate when I get the calls of someone who waited till, let's say they finished in June and they call me the following February and say, hey, I want to do that program. You have to do it within 180 days of finishing. Some companies like Mass Mutual, it's 90 days after finishing. So we got to be really careful about planning out when you're going to apply for this, so we don't miss out on that discount. And then of course, for the females, the gender neutral rates are invaluable. You absolutely want that. It just does not make sense to pay almost double for a very similar contract. So you want to get the gender neutral rate, and then the GSI, which requires that minimal medical underwriting. So I've mentioned these other companies. Again, I just put them in alphabetical order here. Emeritus is the one at UCLA that has the GSI option. It has the gender neutral rate, and there's a 20% resident discount. Guardian, the reason I put the range of 10 to 20% is because they give a 10% resident discount, and then they give another 10% discount for this mental nervous limitation. It's very common in the industry that if you put in a claim for a mental health issue, the companies will only pay you for 24 months. So even if your benefit period is all the way to age 67, they'll only pay you for 24 months. And Guardian gives a 10% discount for that, because in other states, they will pay out the full time. So just know with Guardian, it's a sex distinct rate. So male and female. Again, females paying more. Mass Mutual has a brand new contract that they rolled out last summer. It has a 20% discount, but sex distinct rates. So last year at this time, they had a gender neutral rate, but it's gone now. They pulled it. Principal has, you can read this, 20% off sex distinct, standard 10% with male and female rates. So just to summarize, as of right now, Emeritus is the only option for the gender neutral rates. It's always going to be less expensive for females. In some cases, it's also less expensive for the males. We just have to do a side-by-side analysis. You might be wondering how the rates are calculated. And so I just kind of want to lay this out. Everyone is going to ask for your date of birth. The majority of companies will use your actual age. Mass Mutual is the only company that uses something called age nearest. So what that means is if your birthday is within the next 6 months, they actually age you up, which is kind of crummy, but that's just what they do. So when I show quotes with multiple companies, if you see like age 31 and then 32 for Mass Mutual, wondering why, it's because you're within 6 months of your next birthday and they consider you to be closer to 32 than actually 31. Also, of course, your occupation. I kind of touched on this before, how there's preferred specialties like psychiatry, pediatrics. Insurance companies don't see a high amount of claims from those preferred specialties, so they give them a little bit of a price break versus high risk specialties like all the surgical, all the invasive, and you guys fall into that higher risk. So as I mentioned, if you have a friend at UCLA who's your same age, but different, more preferred specialty, and you get your GSI quote or you get these other quotes from me, you're going to say, hey, my friend's is way, way less expensive. And that's because of their occupation and their specialty. Also location, I kind of asked before we started, it doesn't look like anyone has plans to go out of state, but if you did, we could look at out of state rates, which usually can save a few bucks. And then we've talked about gender. That's a factor in how the rates are calculated, and also the health. And, I mentioned there's that potential for some surcharge or possible exclusions to coverage when you go through full underwriting. So when we started, I said I would show some specific pricing. Keep in mind, this is for PGY 1, 2, and 3. I know that doesn't apply to any of you, but I'm just kind of showing it so that if you have a friend that's one of those PGY levels and they just kind of wanted to lock something in and get started, you can do a starter policy. It's year-round enrollment. You'll notice the difference here. You can't get the full 10,000 because you're not in your final year yet, but they will allow them to apply for up to 6,000. And you might wonder, why would someone do that? Why wouldn't they just wait? Well, we don't know how long we're going to have the GSI at UCLA for. It gets renewed 1 year at a time. Right now, we're in our 3rd academic year, and we don't know yet if we're going to have it when the current PGY3s are finishing, or the 2s or the 1s in the years ahead. We just don't know. So especially for women, if they really just kind of want to lock in some coverage that's on a gender neutral rate, a starter policy is a really good thing to think about. And then they can do a buy-up option to the full 10,000 or higher upon entering, from January to June of their last year. So this next slide is really for you. I chose age 31. I don't know if that's on par with where you guys are at. So if you're a little older, the rates would be a little bit higher. If you're a little younger, obviously they'll be a little lower. But you're able to enroll for this as of January, that we, just past month, all the way through 180 days after finishing, which is basically the end of 2021 in December. And you can see the different levels here. So for those who are going on to fellowship, the very common monthly benefit amount that I say just go low, kind of try to get some coverage now, but keep your monthly premium as low as possible. And then we'll have that larger FIO pool that we can add in later. So most who are going on into fellowship do the 2,500. For those who are entering practice, the most common are the 5,000 and the 7,500 levels of coverage. If you wanted to get the full 10 right away, you just have to show a job offer or signed contract, which right now might be a little early because some of you might, be lining up interviews and things. But if later in the spring or by June you have a job offer, we can show the contract and then get that larger 10,000 amount right out of the bat. But I'd say the majority go with the 5,000 or the 7,500. And again, keep in mind, if you're not age 31, I'll email you the appropriate age packet for you. Okay.
Can I just ask, what is like a 1 year difference in age?
Good question. So you'll see it's about anywhere from $5 to $10 more. However, if you're hitting 35, those 5-year birthdays, like 35, 40, 45, 50, that's when it all really kind of starts to jump. But from 31 to 32, it's usually about $8, but somewhere between $5 and $10 more a month. Not a huge difference. But, if you add it up over paying for this 30 years, you can save some money. So if anyone in the group has an end of February birthday, early March, April, it's best that we kind of get into touch over email or phone, within the next few weeks or so, just so that you can kind of make a decision. Do I want to pay my current age, or do I want to wait until I'm exiting in June, July and pay a little bit more? And I can, if your birthday is like right here, I can show you that. I want to show you an example of a comparison of the gender neutral rate, the GSI rate with Emeritus versus one of the sex distinct rates, because you all might be wondering. This quote compares the UCLA Emeritus GSI contract with Guardian's contract, which is called Provider Choice. I applied all of the resident discounts, and it's truly apples to apples. So I took the 5,000 monthly benefit with 5,000 FIO to age 67, 90 day, all those things are the same. You can see the GSI price for men and women is $247.28. And then the female way higher because it's sex distinct, it's not unisex. And then the male rate is just slightly higher. Guardian always comes in a bit higher. I mentioned for some of the men, we could potentially beat the GSI price by going through full underwriting and looking at other companies. In fact, you could even apply to Emeritus, which is the GSI company. You can apply to go through full underwriting and get the men can get a better rate than the GSI, but we just have to be careful, because if you apply and show them all of your health history and they want to put an exclusion on it, then you've just shot yourself in the foot because you could have gotten the GSI without an exclusion. So for the men in the group, I would want to do, personally, I would want to play it really safe and do an anonymous inquiry, kind of see how they would underwrite you before we go down that road. So I'm willing to do that. And it just takes a week or so to get responses from the company. This doesn't apply to you guys. It usually does, though. There's usually someone in the groups that I speak to who is traveling out of state. But Emeritus will allow us to secure the rates, the same contract, but the out-of-state rates. And usually there's a significant cost savings. I just put a couple examples here of someone who would have relocated to Massachusetts, someone who might have relocated to Washington, to show, how they could have saved a little bit of money, but again, not really applicable to you guys.
Does that change if you move later? Like, what if someone was moving to Massachusetts for the next few years and then they ended up moving back to California? Like, do you lock in that Massachusetts rates forever?
Yeah, so we just have to show that you've actually relocated. So for a resident who maybe finishes the end of June and then relocates by July, we wait until they've moved, let's say to Massachusetts, and they just have to show their new address on the application. They lock in the Massachusetts rates. Maybe they work there for 3 years and then they come back to California. They will always have that Massachusetts rate. So every time they exercise their future increase option, they'll get that better, lower rate, but it's the exact same contract. So it's really something to look at. I do a lot with internal medicine, and there's such a big department that so many do move out of state, whether it's for fellowship or for practice. And it's just definitely something we want to consider and look at. But just know that, again, going back to something I said earlier, this contract is fully portable. So wherever you work in the United States, it's going to move with you, but you'll always pay the rate of the state in which you purchased it. Does that answer your question, Jenny?
Yeah.
Okay. All right, so COVID's impact, this kind of came into play last summer, really. All the insurance companies kind of scrambled. How are we going to handle this? I was happy to see that they were fair. And so if someone tested positive, missed work, we just have to explain it on the application. If they were successfully recovered and returned to work, then it's an approval. If worst case scenario, there is some residual effects or someone's kind of has those long hauler, issues, then it could be a problem. So it's always best to apply when you're, fully working and in good health. So I just want to explain that because it does come up from time to time. I put together this is one of the last slides, so we're almost finished, and I hope we're right about at 11, so we'll try to wrap up soon. But these are some of the common questions that I just wanted to address. The first one, I'll be attending in a large medical center soon. Isn't the group disability insurance going to be enough coverage? Well, a couple things to consider. The group coverage is not portable. So, you might think you're landing your dream job right out of residency, but maybe 5 years later, you decide, you have this huge opportunity to join a boutique practice and you want to leave that large medical system. You will have lost the group coverage at that point. And you might be 40 years old and having to pay a lot more and go through the full underwriting and pay a female rate if you're a woman. So it's just, I think, always best to explore your options as a resident, make the right decision for you. Most physicians, because your income is going to increase significantly, want the group coverage and the individually owned. It's truly the best of both worlds. One other thing I want to point out, the group coverage is really, it's not always the same high level of quality coverage. So I'll give an example because I had a few clients last class who went on to be attending at UCLA. And late summer, they were reviewing their benefit package and they sent it to me and said, help me understand this. What do I apply for? And so currently in the UC system, the long-term disability benefits have the first 24 months that you're out on a claim, it's considered specialty specific, which is what you want. But on the 25th month, it switches to a very strict definition of disability. It's called any occupation. So you have to be so ill or injured that you can't work in any occupation in order to keep collecting. And so it starts out really good, but then it kind of goes downhill if you have a prolonged absence from work of 2 years or more. And so group coverage is great. Don't ever decline it, take it, but just know it's not always the same high quality contract as individually owned stuff is. Also the next one, so I'm matched for fellowship, and I know just from what you guys have shared that applies for a couple of you. Should I buy now or wait until my fellowship is ending? That's a very specific question that we should talk kind of one off if that applies to you. But typically it's best, because of your age, it's best to kind of lock something in now. Also, both of you, it sounds like, are staying at UCLA, which is great, but we just don't know yet if we're going to have the GSI option next year when you're first year fellow. Or I don't know how long your programs are, but is it 1, 2, or 3 years about? So it's always best to kind of take an opportunity when it's in front of you to lock in the gender neutral rate and the resident discount. The next one, will my disability insurance policy cover a pregnancy? This is a great question that comes up a lot for my female clients. And the answer is, it kind of depends. If the claim that you submit is due to a complication due to the pregnancy or a complication due to the childbirth, then absolutely, yes. The disability policy can cover you. If you have a normal pregnancy and you go 38 weeks and you have a normal delivery and you just want to take your maternity leave, then no, it's not going to pay you out for that. Okay, so there has to be a complication either during during the pregnancy or during the childbirth. Does that make sense? And then the last one doesn't apply to you guys, but it may in the future. So just know, if you start out your career here in California, but then move back to your hometown, the policy will fully cover you. It's portable in all 50 states. If you are practicing medicine outside of the US and you get injured or ill, you can put in a claim, but they'll only pay out for 24 months. So you would have to return to the US to continue getting paid out to age 67 or 65, okay? And then the other one is, can I just wait a few years and buy when I'm an attending? And I get this question quite a bit because I know it's tempting. I mean, you have a lot on your plate right now. You're not making, the high amount of money. You just have to understand that if you wait until you're attending, you're walking away from a few things. You're walking away from any resident discounts. You're walking away from a gender neutral rate if you're a female. And some of the more favorable application processes of not having to go through that full medical underwriting. Because if we wait, we always have to be thinking that if you have a health condition pop up or something of that nature, it could be harder to go through the application process. I see this a lot with some of my attending physicians who apply for additional coverage. You have to go through the full underwriting, but also they look at your tax returns, your pay stubs. It's just way more thorough. And if you're a practice owner, they want to see basically everything if you're incorporated. So it's easier when you're a resident. One of the last things here, I just threw in this slide because sometimes I get asked about life insurance. Really, you don't necessarily need this until you have someone who relies on you, something like a child or perhaps a sibling. Sometimes I have clients who have siblings with special needs, and if something were to happen to their parents, they're responsible for their sibling. And so life insurance could be a great adjunct to your overall, kind of protection and insurance. Those rates are based on age, health, and location. There's different types of coverage that we can look at. And I'd always recommend getting quotes from different companies. So as a broker, I always show multiple companies. A career agent is someone who only sells one product. So like State Farm, they're going to show you just one product. So just be kind of aware of that. So we're wrapping up here. And I just want to kind of emphasize that everyone has options. I'm here to support you, and I want to be a resource for each of you. So we can talk one-on-one, whether it's email or phone, and just kind of decide which route to go. if you choose to go the full underwriting route, I always am I'm a cautious person. I like to do those anonymous inquiries just to make sure we're not shooting ourselves in the foot. We don't want to get a decline. And then, because by the way, I don't think I've said this, but if you get declined, you can no longer apply to the GSI. That is the one thing that won't work. So we want to avoid that at all costs. So that's why I do the anonymous inquiries. You want to find, if you're looking at working with other people, make sure there's someone who focuses on physicians. I'll share a very quick story. I was doing a pathology seminar last year at UCLA, and afterward, this female resident came up and said, my mom has a friend, it's our family friend, he works for Mass Mutual, and he sent me a disability insurance quote. Can you look at it? I said, sure. So she sent it over. Everything looked great, had all the things you need, but there was no resident discount applied. So, and just know, Mass Mutual would have taken that application and had her pay that rate. They're kind of ruthless in that regard. All the companies are. It's up to the broker to know to apply the resident discount. So just make sure you're working with someone. If it's not me, someone who works with physicians and kind of knows to make sure you're getting every possible discount that you can get. That goes into the next bullet point. And then make sure you're comparing apples to apples. And Eileen actually would be a good example here, because she had this whole spreadsheet that she got from another agent when I met her last June. And it was pretty confusing, to be honest. They left off the inflation protection. It was kind of like they put age 65 on some quotes, age 67 on others. Some had inflation protection, others didn't. And truly, we weren't looking at an apples to apples. So make sure that line by line, if you're comparing quotes, that you're really making sure everything is on line with it, with each other and apples to apples. And then please keep your date of birth in mind. And also know that if you want to apply to Mass Mutual, you have up to 90 days after your finish date. If you want to go with the GSI or the other companies, you have 180 days. So we can kind of map out a plan. And the final thing is just, I put personal email addresses there, because if you want to put this off for a bit and wait until you're finishing, as you know, your MedNet address will turn off when you leave, and we could potentially lose touch. So if you want to work together, let's make sure that I start using your Gmail or whatever address you prefer. It's just kind of easier that way. Also, when you get your policy, I would email it to you, typically a PDF of it. And if it goes to your MedNet, you've now lost that document if you didn't download it. So it's just best to kind of go with with your personal email address. That's it for me. I have my contact info here. Jenny and Katie have it too. If they can always forward to you, but you can take a picture of this if you'd like. I just want you to know I try to be as flexible and as easy to reach as possible. So, if that means early mornings, evenings, I do evening calls often, even weekends like today. So whatever works for you will work for me. Just with a little advanced planning, I can accommodate your schedule. So with that, are there any other questions? I know we got a couple good ones during the presentation, but is there anything that's kind of lingering now that you'd like to ask?
This might be silly, but does disability insurance, do the claims and all that go away when you retire? Like, when does it stop?
As far as, I just want to make sure I'm understanding the question. Do you mean when the payout would stop, or?
Like when the payouts,
Okay.
when a full payout stops.
Good question. So it would go all the way to whatever benefit period you selected. So for you guys, I always recommend the to age 67 benefit period. But if you want to save a few bucks, you can reduce it to age 65. We can show you. There's also a 10-year benefit period, a 5-year, a 2-year, but really only attending physicians who want to supplement coverage and add more policies in the future, they'll go with shorter benefit periods. But for you guys, because you're young and have your whole career ahead, we usually do it at 65 or 67. And so that is when the payment would stop, once you hit that age. If it's still a valid claim, they'll check in with you periodically when you're on a claim to make sure this health condition is persisting and you're still unable to, to work your specialty. but as long as it does, you'll get paid all the way to age 67. So that's where the security comes in. Because you guys, you know, are surgeons, you know, and using your hands, it's so important to protect that and know that you could technically get a paycheck all the way to 67, even if you're not working in your specialty. And with that own occupation definition, you could go and work and do something else. You know, you could be a medical director for a company that's more of a desk position. You could be on faculty and still get paid and get the payout to age 67. So hopefully that answered your question.
Yeah.
Okay. Anyone else? Okay. Looks like that might be it. So please know that, especially if your birthday's coming up, or if you kind of want to map out a plan, let's get in touch at your convenience, and we'll kind of go from there and do what's right for you and just kind of show your options. A lot of people like to maybe research it now, but then not apply until later. So we can map out that timeline. Also, some of the companies will allow me to receive the application, let's say April 1st, but not pay for it until June 1st. Or if I take it in May, we can pay on July 1st. So just because you start the process with me doesn't mean you have to start paying right away. We can work it out financially to whatever is beneficial to you.
I have a question. Is there, sorry if you already answered this, is there a downside to getting like multiple quotes from multiple different companies? Like, because you know how if somebody runs your credit score too much, it is not a good thing. Is there
Right.
something of that in this? Like, if you were to get quotes from Emeritus, Mass Mutual, Guardian, and then decide, is there some sort of negative impact?
That's a good question. The only time they're going to start really looking at your DMV records, your prescriptions, all that stuff, and would be when you apply. So just by gathering quotes, it's not going to trigger any sort of event where it would flag you in any way. It's only when you apply. And so I always think it's a very good idea to shop around and, you know, get multiple quotes that are specific to you. And I always put them in a side-by-side spreadsheet so that you can see it on one page and adequately compare. But to answer your question, it doesn't trigger your credit score or anything like that. You're only going to feel that impact when you actually apply, because there is something called the Medical Information Bureau. So let's say you apply to Mass Mutual and they do their prescription drug check and the DMV and all that, and they flag you that you had a DUI or that you, and maybe they decline you. That's going to be on your record. So then when Emeritus goes, then you go and say, oh, you know what, shoot, I need that GSI policy. You go and apply for that. The one thing they check is the MIB, that Medical Information Bureau. So if you're flagged in that, you could potentially be declined for something like the GSI. So that's why I always just really try to play it safe, you know, and do the anonymous inquiry, and hopefully you disclose as much, you know, information to me so that we can really tell the company as much as possible and see how they would underwrite you before taking that risk. Or you apply for the GSI, secure it, and then go apply somewhere else and replace the GSI. It's kind of a hassle to do that, but some people do. Sometimes the men do, actually. So hopefully that puts your mind at ease that there is no risk to get multiple quotes from multiple companies. Good question, though, because our credit score is always something we want to, as a high number.
Thank you so much,
Thank you.
Michelle. This is incredibly.
Sure. My pleasure. I hope you guys are able to have a good, you know, relaxing rest of the weekend and tomorrow as well. Thank you so much. Sure, you're welcome.
The recordings, because I think honestly the whole residency would benefit from this.
Sure, I will. I'm going to stop the recording in a second, and then I'll be able to email it to you and Jenny. Yeah, because I think you're right. The other PGY levels, even if they're not poised to make any decisions right now, it's just kind of nice to have the information in the back of your mind so that when it is the right time. And then there's that starter policy option too, that they can take advantage of it. It's year-round enrollment. So I'll be happy to send that out.
Thank
Thank
you.
you.
All right, great.
No.
Take care, guys. Bye.
Did she give you? Did she go through the other?